The corn market and the wheat market both under pressure here to begin the day. Not so much for soybeans. John Jenkinson here. Let's go to the corn market. December corn trading more closer to the lows than the highs. 389.5. That's only a penny away. That's down 1.5. July is down 3/4. 414.5. Let's look at this soybean market. November up a penny at 935. Now that's 4 3/4 off of the low. May is up 2 at 969.5. The Chicago wheat market down 6.5, 525 3/4. The July down a complete nickel at 539, only a penny away from the low. December Kansas City wheat down 5 1/4 at 428.5, and the July down 4 3/4 at 458 1/4. And here with us is Todd Horwitz from his office in Redwood, Illinois at Bubba Trading. Todd, first of all, I want to start over here. I was reading some of your comments here that you sent out earlier, and you talked about Brexit. How does that fit into this whole big picture, and especially when you take into consideration the U.S. dollar, some of our commodities, things like that?
Well, John, I think it would be beneficial to us if they do pull out. It makes a trade deal with Britain, just Britain only, without having to deal with the rest of the EU, which has been a pain. And you know what, right? It's been a whole challenge dealing with the EU, with Germany being very stubborn at what they want to do and everybody else. So now if Britain goes on their own, we directly get to deal with them. So I think it's a positive factor, and I think that will have a positive effect once the vote is finally done and once they finally pull. I think that's going to be very positive for all of our markets, including the grains and livestock.
Can it also continue to put a little bit of pressure on this dollar? Look what the dollar has done here over the last week or so. And, there are some now talking that maybe we could go down into the mid 96s. Right now we're up 100 points, but, we had a lot of weakness in this dollar market last week.
It has been really weak, and I think, John, the biggest thing we look at here is the Federal Reserve. We don't have to go any farther than the manipulation of the Fed when they went back into that quantitative easing program, even though it's the QE, not QE program. What that really is telling you is that they're devaluing the currency to bring the price lower to help to increase exports, which really is not the problem with exports. The problem with our exports is that the global economy is melting down. But that is exactly what happens. So when you start to inflate the system again and go back into this quantitative easing, if you remember, when we first started quantitative easing back in 08 and 09, the dollar actually went down into the 80s. So again, the dollar looks a little bit weak right now. I think this will be temporary. I think that you'll probably see a gradual turnaround. But right now, because of the easing program, because of the dollar, and because of what the Fed is doing, that is reducing the value of the dollar by itself.
But you're still positive the grains, correct?
I love grains. I think that what we're looking at right here, John, is a great buying opportunity once again. I mean, if you read Thursday night, I wrote to everybody, I said, it looks like we should see a little bit of a pullback, and I want to look to be a buyer of that pullback, and I think we're there. The only thing that disappoints me of the grains is the overnight trade from last night to this morning. We were higher overnight. They looked really solid, but they have pulled back, and with wheat and corn turning negative, that doesn't thrill me. But again, they've got a little bit of room to come down anyway, so I'm not concerned. But I would have liked to have seen them stay somewhere about unchanged when they pull back instead of going negative on the day.
Okay, Todd, we'll be back in just a moment with Todd Horwitz. We'll talk about livestock next. So don't go anywhere. Stay with us here on the Market Day Report. Well, we'll get Todd's thoughts about this livestock trade, but first let's bring you up to date on the latest numbers. On the live cattle market, we're still trading at a little bit of a discount to where we traded cash this week. The October up 53 at 111.03, December up 47 at 114.10, and the February is up 45 cents a hundredweight. Over in the feeder cattle market, 25 higher on the October. November, our next front month here, up 35 at 143.20, and the January up 13 at 139.57. All of these contracts on the higher side. So we're trading inverse from where we did on Friday, with the grains a little bit weaker, but the livestock higher. December hogs up 72 at 68.67. February up $1.10 at 78.58. The April up 105. At 84.50. We do have new information for beef and pork cutouts here at the midday report. The beef cutouts actually are mixed, with the choice just up $1.50 at 219.54. The selects down 3 at 193.01, and the pork is all higher. with a big jump in the belly market, 419 higher at 129.74, but the loin's off 55 cents. Todd, what do you think of this protein complex and its ability to rebound from Friday here today?
I think it's great. I thought Friday was almost as scripted. We tested the upper levels in both fats and live cattle and feeders. I mean, and of course we pulled right back down, which is perfect action if you're looking for the next move to be much higher. And I do think that the next move is going to be much higher. I think we're going to go through 115 in December cattle, and I do think we're going to go through probably 148 to 150 in November feeders. So I think all skies look great going forward. I think we're in for a very nice rally and continue. The only concern with feeders is a little bit of that backwardation we're seeing right now, but I think overall the technicals look really solid and everything looks great and solid going ahead.
Has the protein market basically divorced itself from the financial market? And the reason I ask that is, there for a while we were watching the financials move from up to down and up and down, and the livestock was basically following along.
Well, John, I think what happens right now is now that basically for most of the average investor, all the focus right now is on equities because, listen, basically it's the only place to go, chasing yield, the whole thing. So if equities come under a pressure again, which is what they were doing for a while, then that will open up these outside markets like the ag space, like cattle and things like that. But right now, the money groups are pouring everybody into equities and not looking for the outside. So as soon as we see some pressure on equities, I think that will also be beneficial to grains and to the protein complex and push that higher. But technically they look great now, so that could only be a big benefit if we start to see a little bit of selling in equities, which would create much higher prices, I think, in the protein complex.
And we're a little bit off today on the heating oil market. What are your thoughts over here on the energies?
Well, I think oil is going, as you know, I think it's going into the 40s. I don't think nothing has changed over there. We've got we're well oversupplied. We can produce all we want. We're net exporters. The global economy is in trouble. And again, I think the whole formula plus the technicals just say, hey, it's going lower. And until proven otherwise, I think we're going into the 40s. And I would expect to see that sooner rather than later.
Okay, Todd, right now that November contract, 53.02, down 76 cents. Todd Horwitz, Bubba Trading here with us, Tammy, to give us an overall view and a peek behind the curtain of what's going on behind the scenes.
We like that behind the scenes look, don't we? Thanks, John.